WMT delivered 4% revenue growth last quarter. Operating income fell 2% due to higher operating costs related to investments in e-commerce and technology. WMT refuses to lose the online war to AMZN, which is commendable. WMT is still running in Quicksand. Sell the stock. Walmart. WMT delivered a revenue and earnings beat last week. The company reported revenue of $122.7 billion and EPS of $1.14. The stock fell about 1% post-earnings despite exceeding analysts' expectations. I had the following takeaways on the quarter. E-commerce was the superstar. Walmart generated 4% growth. Why? Low single-digit growth could be considered adequate given the company's critical mass and the overhang from Amazon, AMZN. Revenue from Walmart US was up 3%, Walmart International rose 12%, while Sam's Club revenue fell 3%. Walmart International delivered strong results. Comparable store sales grew in 8 out of 11 international markets. The Easter timing benefited sales, offset by headwinds of approximately $200 million from the divestiture of the Suburbia clothing chain in Mexico. International represents 25% of total revenue and it could become the next growth engine. E-commerce was the superstar this quarter, growing revenue by 33%. Why? I suspected the company needed to grow e-commerce revenue by at least 20% or the quarter could have been considered a disappointment. Walmart beat that bogey by a wide margin. The company has been determined on beating back any online threat from Amazon. Walmart has beefed up its online presence via acquisition, the latest representing a $16 billion investment in Indian e-commerce stalwart Flipkart. The Flipkart deal will likely spur e-commerce revenue, but market chatter suggests it could also lead to steep losses. To be relevant, online companies must spend money. Walmart recently announced free shipping from samsclub.com for Plus members. The new benefit could increase the number of upgrades to Prime membership, and improve e-commerce sales. However, it could also create higher shipping costs. Total comparable store sales were 2.1% during the quarter, driven by comparable ticket growth of 1.3% and 0.8% comparable traffic growth. E-commerce added about 100 basis points to the comparable sales growth. The metrics illustrated that Walmart still has pricing power and sales traction within its stores. This was a major sign of strength from the company. Operating income margins continue to suffer as online sales outpace in-store sales. They usually come at the expense of margins. That could be due to in-store shoppers exploiting the differential in price points online versus in-store, or increased technology costs needed to maintain the online platform. Walmart's gross margin was 25.3% versus 25.4% in the year-earlier period. Operating and SG. Operating income of $5.2 billion was down 2%. Why? Despite the 4% rise in revenue, I expected operating income to decline even further. It just proves that even when Walmart is firing on all cylinders, the company still seems like it's running in quicksand. Operating expenses will likely continue to ramp up due to increased technology costs to maintain the company's online offerings, and additional perks like free shipping. The perks help maintain the stickiness of e-commerce revenue. Walmart has refused to lose the online battle to Amazon, but it comes at higher operating expenses and lower margins. Conclusion: WMT is up over 8%. Why? But the company is running in quicksand. Sell the stock. Disclosure: we have no positions in any stocks mentioned, and no plans to initiate any positions within the next 72 hours. I wrote this article myself, and it expresses my own opinions. I am not receiving compensation for it, other than from seeking alpha. I have no business relationship with any company whose stock is mentioned in this article.